Hello, good morning guys. Welcome to the Gold and Silver Club weekly review. We're just about to get cracking guys. We just want to do a quick sound check. Yeah, you can hear us okay. Absolutely fantastic. Great. Okay guys, so there's a lot of movement this week, particularly in the gold and silver markets, and we've got non-farm payroll coming up obviously very shortly. So a great session we've got lined up for you this morning. So welcome first of all to the Gold and Silver Club end of week review, US non-farm payroll special. Okay, so good to see certainly some familiar faces on the call, and we are going to recap. So for those of you who are new to the weekly report, what we're going to look at is going to be a summary for gold, silver and commodity currencies. We're going to look at the top trades of the week. We're going to cover live market commentary and technical analysis. We'll look at the week ahead, so key events looking forward. We'll also be doing Q&A, so answering any of your questions this morning. Okay, so really guys, in the gold and silver markets this week, the big news has been the big gold drop we've seen. So gold dropped to a 1 month low this week. So it resumed its decline this week to a 1 month low amid a political deadlock in the US just regarding the fiscal cliff, which has been really a big driver at the moment with regard to gold coming down. So gold slipped all the way down to 1685, was supported at quite a critical level, which we will go into detail this morning. And we went up, this is all the way from a high of 1750 last Wednesday. So there's still no deal between the US President Barack Obama and the Republican Congress, which is threatening the world's biggest economy of falling back into recession. So when 607 billion of tax hikes and spending cuts come into effect on the 1st of January 2013. So the main event today is obviously going to revolve around US non-farm payroll, which is just 2.5 hours away now. And we're going to be looking at how this affects the US dollar and gold prices. So obviously the big question today is, will gold prices continue to fall or will they rally? Okay, so just a little bit quickly about myself and Nick. I'm a professional, Phil Carr, professional trainer and speaker. I'm the co-founder and director of the Gold and Silver Club. I specialise in teaching people how to make money from trading the biggest financial markets in the world, Forex, gold, silver and oil. I've trained literally hundreds of individuals to become independent traders, successfully manage their own investment portfolio, and responsible for the research and development of the Gold and Silver Club trademark strategies that have a proven track record of generating returns for traders. Also a regular contributor to a number of financial publications and speak at numerous trading seminars and workshops. And joining me on the call, Nick Kalsi, professional trader, investment analyst and speaker. Nick began his career within private wealth management in 2002 before making the transition into proprietary trading. Prior to co-founding the Gold and Silver Club, he spent over 5 years coaching professional fund managers and traders internationally for some of the world's top-tier hedge funds and investment banks, and it's through his first-hand relationships with some of the world's most successful traders he's discovered the formula, mindset and tools that give any individual the definitive edge to make money in any economy. Also writes for a number of global business and financial publications, and also we've both appeared on numerous on television, giving insights just into the financial markets. This is just some of the press we've done very recently. This was Global Banking and Finance Review, International Life magazine, just the South Africans, so just a little bit on us, and this is us actually recently on Swiss TV, just giving our views about Q4 for gold and silver prices. Okay, so that's just a little bit about myself and Nick, if it's your first time on the webinar, guys. So we are going to quickly look and want to see what the gold prices are at the moment. Okay, so if you just want to have a look at your screens currently, have a look at what the gold price is right now. We're going to look at some live charts very shortly anyway. And I would actually tell you the price at the moment of gold is $1,696 an ounce. So we've actually breached that 1,700 mark again. We're slightly under it. So this afternoon is going to be very interesting to see what sort of levels are going to be held or broken this afternoon for non-farm payroll. Certainly we're going to expect a lot of volatility. Okay, so we're going to live market trading. We're going to go through the top trades of the week. So there have been a number of nice price action trades this week, and have included We had an opportunity, actually. This was a level we were looking at even on last Friday's webinar, on the weekly webinar in the morning. So this was our first position since last Friday's webinar, if you like, our weekly report. This was a long position on Australian US dollar. We came down, we tested a quite important price action level, 1.5591. It held very nicely. We saw a nice candlestick set up, a nice hammer from that. The risk to reward on it was very good, and from a risk of 15 pips, we reached our take profit, Fibonacci level, take profit level, just later on that day. So for 56 pips. So you're looking at, if you're trading in lots, at $150 worth of risk to make 560 for a nice ratio on that one. So over 3 to 1 on that particular trade. And I actually believe that was 4 to 1 on that particular trade on Australian US dollar. Then we actually had another opportunity. Actually, Australian US dollar has been hitting its head most of the week, early on in this week, against this level of resistance, 1.0482. It's a level of resistance we've tested now on 4 different occasions. We couldn't break through it. We were monitoring this closely, and we had our setup was confirmed on the candlesticks, and you can see there where we finally sold off from that level of resistance. We couldn't break through it. Fairly good risk on that one. So again, we had a 3 to 1 risk to reward, selling short Australian US dollar. We were looking at a risk of 14 pips to make 41. We just simply managed to take that trade just back down to its level of support. You had to be fairly quick on this, get in and out, because the price did come all the way back again to retest that resistance. So you had to, this was a trade you had to monitor more closely. We were out of it once we got to a level of support which was clearly not being broken. So for a 14-point risk, 41-point profit. So $140 risk to make 410 trading in lots. So for a 3 to 1 risk to reward. And then we had also USD CAD up until probably about yesterday. USD CAD has been channeling for the last 3 or 4 weeks now. It's just been moving in this sideways range, and we've seen it come from resistance, come back to test support, support has come back to resistance. It's been a very predictable trade, and this was simply a case of earlier on in the week getting in again at this 0.9913 level and being able to get into that. You didn't want to have too much of a big risk on that trade, because if you were incorrect, the price would probably come down quite heavily, high momentum move. So simply a 13 pip risk on that to make 39 points, trading it back to a level of resistance. So for some of you that trade the commodity currencies, you would have seen this sort of movement occurring pretty much all the beginning of this week and last week on USD Canadian dollars. So $130 risk trading at one lot for $390 profit, 3 to 1 risk to reward, in and out of the trade the same day. Then we had gold. I mean, in terms of gold, gold has broken through a level in the last week of 1,700, and we came down. The point with gold, though, we're trying to short gold, is it's very difficult in terms of your risk to reward isn't there. It's more or less a 1-to-1 risk to reward in terms of where you put your stop loss when you're shorting gold. So our preference was to be shorting Australian US dollar in that case, which you can see that we did, and also going long USD Canadian dollar. But gold for us wasn't the trade to be shorting last week, or this week even. We had much more profits available in the commodity currencies. And then we've come down and we've retested this important level of support. So 1687, this is a Fibonacci level, and it's important price action level. So if you don't have that on your charts, you need to take note of that, especially this afternoon when we have non-farm payroll. If that level gets broken, we can expect, where if we break much below it, between 1685, potentially expect a high momentum move to the downside, and if this continues to be supported, we could get a nice rally, but I'll talk through that very shortly. So this was simply a trade that we took yesterday. We tested that level, 1687. Very simply on that trade, we just rode it back to 1700, which is been a level of resistance, and in fact it's just come back down again after retesting that level. What we've seen there, 1700 or just above that, was providing a good level of support previously, and now at the moment it's providing a resistance level. So this is why we wanted to be out. So for a risk of 40 pips on that to make 129 pips, 3 to 1 risk to reward ratio, very happy with that. Again, just a fairly quick trade. We were in and out, in the morning, out in the afternoon. Crude oil was the real monster trade over the last week. In fact, several of our traders, Gold and Silver Club traders, caught this move as well. We had a perfect price action move. Price came up to 112.23 Fibonacci level. Price was rejected and came all the way down to our target 108.43. So for those of you who've been on some of our previous webinars, this is a trade which has played out several times now this year, these key levels. And you can actually see a little bit earlier, just a few weeks back, that we've also supported that 108.43 level with pinpoint accuracy on crude oil. So these are very important levels for crude oil. We came all the way down and we reached profit target. So you've got literally from a 50 pip risk on there, one lot, $500 risk. It was a 380 point trade. Came all the way down, hit our take profit for $3,800 profit. And yeah, so the risk to reward on that was fantastic. So it was about 8-to-1 risk to reward, and that played out over about 2.5 days for crude oil. So those are really the top trades of the week, guys. And what we're going to take our eye on to now, we're going to look at some live market analysis. Okay, so let's just go across to my screens. Okay, guys, that is just quickly switching over so I can show you my screen. Okay, perfect. So here we have, guys, this is the chart we were looking at earlier. This is for crude oil. So here you can see this is the price action move that we've had yet again. So you can see here where we've actually, this was earlier on during the week, we came up and we retested this level of resistance, 1112.23. It's a key level that we've traded several times in the past. You can see where the price has come up to there. We've formed essentially a inverse hammer there, or it's known as a gravestone doji. So essentially the price has come up, it's tested that level of resistance. You can see price has been rejected, profit taking is occurring, and actually sellers have now taken over, and we're seeing the price come down, and the risk to reward was exceptionally good on this. You can see here the price has just come all the way down and it's come back to our target level of 108.43 on crude oil. And also this also provided the previous level of support again, where very simply getting into this trade 108.43 again for it to be ridden up to 1112.23. It's a 380 point trade each time that trade setup occurs, and it has occurred several times this year. And it's very simply a case of just having alerts set up at those price points so you don't miss the trade. Crude oil is very volatile. So what I would say is if you do get on, we didn't quite have the setup we wanted when we've retested there. Obviously, we come out on profit. We've retested this 108.43 level. Price in this case wasn't rejected. Price breakthrough. On a break of that, you certainly want to be out fairly quickly. You don't want to be caught in a breakdown in price if you've gone long there on crude oil. So crude oil can be a bit of a monster, but if you can get in on these big trades, the risk to reward is several times greater for your reward than your risk, where you can afford to get into several different crude oil trades just at lower levels of risk. So you're often looking at 25 to 50 point risk, and on the upside you're looking between about 250 to 380 pips reward when you get it right. Okay, so that is crude oil, guys. So just doing some analysis there, and let me just bring up and just see where I can just see if you've got questions, guys, do put them in the Q&A section. Okay, perfect. So, okay, I just brought those up. Okay, great. Okay, hi there, Abu. Hi there, Mike. Excellent. So, guys, if you've got any questions, I've just got the chat up there. If you want to post those in there, I'll go through those as well whilst we're going through the live markets at the moment. So let's quickly take our eye across to gold and see what is going on at the moment. Okay, so gold at the moment, what we want to pay particular attention to, obviously, is this level of support and this important Fibonacci level. So at 1688, this level, and it has been respected. We've broke ever so slightly down from it, but you can see we've really held around about 1683. And in fact, the candlestick setups there, known as, these are dragonfly dojis, or they're inverse hammer. They're hammers actually. So you can see their prices come down, it's been rejected, prices come down, again being rejected, and then we've kind of rallied up to the upside, but only to about 1700. That's been muted. Really, everybody's going to be waiting for the non-farm payroll decision this afternoon. And in terms of the non-farm payroll decision, I'm sure a lot of you, more advanced traders know this anyway, but in terms of how this would normally play out, obviously if in the US, if the non-farm payroll statistics which come out are very positive for growth of jobs and more jobs have been created in America, we will subsequently see a stronger US dollar, which would typically cause the gold and silver market to sell off. And in the flip side of that, if the job market has deteriorated, less jobs have been created, more unemployment, gold and silver will often get a lift from that, and the US dollar index will sell off. Now, at the moment, we have to bear in mind as well, it's coming into the second week of December next week. Even now, we're starting to see volumes in the markets start to come down because more hedge funds, institutions have started to wind down their positions, taking, as they come into the winter season and the holiday season, we may see some unexpected volatility because there's going to be less traders in the market. The markets may not react logically to whatever news that we have. So this is where we want to actually be following the price action. For example, the last few days, or certainly yesterday, the US dollar put in a bit of a rally, and at the same time gold and silver were rallying. Now the euro was selling off, but gold and silver were rallying from this low. So this is not a usual relationship with the US dollar and gold and silver, and this is due to the fiscal cliff situation, partly due to bargain hunting on gold and silver. But I would say don't try, I know a lot of traders don't trade the news, but we love trading the news because especially of key price action levels, and also, we've got access to live news feeds, so we do have news coming through exceptionally quickly so we can see exactly what's going on with the news and we can react to it quickly. But you do want to be following your price action. Look out for key levels. So obviously on gold you want to look out for key levels such as 1688. If this gets tested, if it gets supported, if we do get a breakdown in price, I'll go through probable scenarios with you. So if we do get a breakdown in price on gold, and let's say we get the momentum goes to the downside, the next level below 1688 we will be looking at support would be 1674. That is also the low that we put in after non-farm payroll at the beginning of the month. So exactly a month ago, that is the low, 1674. So if you are in a position on gold at the moment, or if you're looking to get some pullback prices, we will be paying a lot of attention to 1688 again and 1674 on any big pullbacks on gold. Okay, so those are the important levels to be watching at the moment. So I would say the 1688 and 1674 level there. If we get a break of 1674, we could come as low as 1630. Could be a high momentum move. We could get all the way down, certainly to 1650s and 1630s. So you may wish to be shorting that if we do get breaks of that. Personally, I would favour shorting the commodity currencies over shorting gold at that point, but depending on the risk to reward on the trade, we'll have to see what the setup. Obviously, if we do get supported and if we do get a rally this afternoon in gold and we get a big move, we will be looking at profit taking levels. Logical profit taking levels are going to be where we've seen previously at 1721 on gold, and also we're going to see profit taking at 1727 around about these levels. If we do get a breakout of 1727, we would potentially be looking to retest 1750 level if we can get that sort of high momentum move. Okay, so those are really the key levels we're going to be looking at, and at the moment the market is very indecisive. We're just kind of toying about that 1700 level right now. Make sure if you're taking trades on gold this afternoon, just make sure your risk to reward is good. Okay, let's have a look. We're just getting a few questions through. Okay, so Ray Frith, what is your view of the direction and why? Okay, we'll come to that very shortly. Black Cat, 1675 is a target, fib 1754 to 1705. So you're looking at that retracement. Okay, good. So the levels that we're looking at the moment, I mean, you can very clearly see these guys. I mean, you're completely, if you come back to the obvious price action, right? And that's what it's about. What traders are looking at, what the institution traders are looking at. 1674 is clearly a level of support, right? You've got a price action level there, and that's clearly a level of support. That's an area where previously, where the price came down, sold off to, it was supported. 1688, you can see that's just been supported yesterday, is also a very clear level of support as well. This is a level which has been supported previously. For those of you who've been trading pretty much gold and silver all year, these are strong levels. Now, I've seen some of the, in terms of where you're drawing your Fibonacci levels from, there are a lot of variations of where you can draw your Fibonacci's from. All I would say to you is, wherever your levels are drawn from, have a look. Is the price respecting these levels, okay? We don't have time for us to do a proper a webinar all about Fibonacci and where we're drawing them from at the moment. Perhaps we could at a later date. But you want to make sure your levels are acting as support and resistance, and they are levels which have been utilized by other traders, okay? That's as much as I kind of go into on that. And so these key levels here, if you want to look at them, 1674, 1688, 1721, 1727, they are all key price action levels where we are seeing the price move between over much the most of November and half of October as well. So you really want to have a keen eye on those specific levels for gold at the moment. In terms of the overall sentiment at the moment, we're not really too fussed. We're going to trade what we see. You know, I'm really not going to be loyal to any side of the trade on gold and silver. I'm simply going to trade what we see this afternoon. So if we get price action levels supported, we'll be trading those using our trademark strategies. If we get breakouts, we'll be trading those. It's whatever is presented to us this afternoon, and it may be that the commodity currencies offer the better risk to reward. It might be that gold and silver do. That's what we'll be trading this afternoon. So we don't like to give our actual prediction on what's going to happen. We will trade what we see. We don't want to be stuck into one way of thinking. We're not really that. We're traders. We're not analysts. We're looking to take advantage of what is given to us in the markets. Okay, especially with regard to risk and reward. Okay, so now we're going to just take our eye to silver. So what we're looking at in silver at the moment, silver has been very volatile. I mean, we can see we were supported in price just yesterday. We came down, we retested this 1350 level. We're seeing this Fibonacci 3311 now providing resistance. So previous support really is becoming sort of a level of resistance for the time being, this 3311. We have actually crossed over. There's a trend following tool we use which indicates we're either going to consolidate sideways or potentially go a little bit lower on silver at the moment. But again, it's going to be very much down to a lot. It's going to be very important this afternoon what we get with non-farm payroll. So do watch for breaks of this level of support, that really the lowest level we've come to in the last 2.5 weeks, around 32.50 on silver. In terms of the upside, so breaks out above 33.11 and above about 33.25. You want to be looking at those levels as well for a potential breakout to the upside if we do get some strong momentum for the metals and the US dollar sells off today. So we'll be certainly paying a lot of attention to that. In terms of the commodity currencies, okay, so we're going to look at USD Canadian dollar. So here you can actually see USD Canadian dollar. This is where we are currently. We've had this whole channel all of this week essentially. So we've been moving sideways really from pretty much about 23rd November. We've got this channel, this level of support, and we've got this level of resistance. So the level of resistance is hereabouts, and the level of support. And you can see we broke through this channel yesterday, but this has been quickly supported again, and USD Canadian dollar is kind of working its way back up to the upper end. So we're really moving sideways in USD Canadian dollar at the moment. Like I said, there's been a lot of opportunities just to be selling short from resistance, getting enough support, selling short from resistance, getting enough support. USD CAD has been fantastic just for range-bound trades throughout the last 10 days or so. There's been a lot of opportunities just to kind of get in and out based on these sort of swing movements from resistance to support. So USD Canadian dollar, if we do get a rally in USD Canadian dollar this afternoon, we will be looking at this level of resistance, which is going to be around about the 0.99538 level on USD Canadian dollar. So we'll be paying close attention to that level of resistance to see if there are some opportunities. We'll be looking at breakouts or potential reversals from that price, and you can see where the price has been supported. We broke through ever so slightly yesterday, but now we're coming back up to the sort of this mid-range on USD Canadian dollar. So obviously the markets are all watching very closely to see what is going to happen with non-farm payroll this afternoon, which is going to create some opportunities potentially. And New Zealand US dollar, very interesting. So we've just come up again to this level of resistance. So you can see here, New Zealand US dollar, this is the third test. So we tested this level back in September. So at 1-2, we've come and retested it again, and you can actually see there where we've sold off. So obviously traders are taking profit, and in terms of the downside at the moment, I mean the trade is already 35 points. So even on some of these trades, guys, even if you are catching just the profit taking, it doesn't need to be a case of in catching the entire move all the way back to the previous level, price action level, or level of support. What you can actually do is just very simply, you can see here from the that you'd be looking at from staying short from this level of resistance is around about 8 points would keep you in the trade. Obviously you have to pay the slight spread you're going to get on that, so we're looking at around about 12-point risk on that. And just from taking profit, potentially traders getting in short on this position, the trade is already kind of about 33 points to the downside off that level of resistance. So New Zealand US dollar, obviously it's too late to jump in that on the short side at the moment, but we are interested to see if we're going to come down, retest these sort of level, well, particularly a price action level here, and we're going to see what happens this afternoon, whether we're going to break out finally from these highs with New Zealand US dollar, or whether we're going to have a breakdown in price. Australian US dollar finally broke out yesterday of its trading range. We had a level of resistance which was being tested a lot, which was just here. This is round about the it's the 1.0485 level. This level was providing a lot of resistance. Several times we just came down from this level of resistance, came down, tested the price action level again. Fibonacci level, you can see where we just sold off, retested this level. We've come back up again to test this sort of, let me just draw this for you so you can get a bit of a clearer picture of where this resistance level is. Okay, so this is the level of resistance we've had pretty much all week on Australian US dollar. You can see yesterday we broke through, then we sharply came down again. It was a spike in price. We're coming down at the moment. We're midway really at the moment. There's no reason to be entering this trade at the moment. So very interested to see if this is going to break out this afternoon, Australian US dollar, or if we're going to have a breakdown in price back to these price action levels and potentially previous levels of support. Okay, and we're going to look at, just bear with me. So we've covered, guys, we've just gone over USD Canadian dollar, New Zealand US dollar, Australian US dollar. Do let me know if you've got any questions on these, guys. We're going to just quickly come back to gold and silver before we go over, obviously, the key news announcements to look at in the week ahead. Okay, and we're going to just, let's have a look. We've covered both gold and silver. And crude oil at the moment has just really broken down from this key level at the moment. So we'll see how that reacts this afternoon to the non-farm payroll. But really the main focus for us is going to be the commodity currencies, and we're going to be looking, obviously keeping a very close eye on gold and silver setups this afternoon. So do take note of the key levels we've just gone through there. Okay, fantastic. What we're going to do, guys, we're just going to look at some key news. Obviously, we've got non-farm payroll today. We've got a few other news announcements as well, which we want to bear in mind for next week too. So let's just go back to the slides and we'll go through those for you. Okay, so for the week ahead, so on, obviously today we've got non-farm payroll. So for some of you who are new to trading, actually, I'll tell you what, whilst we are, just before we go through that, let's have a look. Okay, fantastic. Guys, just was having a quick look to see it's great to see some of our traders are on the call as well. We've got a session very shortly after this, so I just want to quickly recap the key news events looking forward. And we're going to be looking, so first of all, Friday at 1:30 p.m, US non-farm payroll, obviously. So for those of you who are new to trading, really, a lot of you are seasoned traders, but if you've not come across this before, US non-farm payroll is essentially the measure of US unemployment change in the US, excluding those who work in farms. And it's a very important indicator of consumer spending as well. The higher than expected reading should be taken as bearish for the US dollar, while a lower than expected reading should be taken as bullish for the US dollar. And then moving into next week, next Tuesday, we have got the German ZU economic sentiment. So this is going to be gauging really the 6-month economic outlook. So a level above 0 indicates optimism, below this indicates pessimism, and this is very important for the euro. So for those of you trading euro USD, and we do get correlation with the gold price with the euro as well. Next Tuesday, 1:30 p.m, we've got the CAD trade balance. So for those of you who also trade USD Canadian dollar, do pay attention to this. Quite an important announcement. So the higher than expected reading should be taken as bullish for the USD Canadian dollar, while a lower than expected reading should be taken as bearish for the US Canadian dollar. And that's also very important because it is correlated to the commodities markets. Next Tuesday, we also have the US trade balance. That's important. It's a measure of the difference in value between the imported and exported goods. So a positive number indicates that more goods and services were expected than imported, and a higher than expected reading should be taken as bullish for the US dollar, while a lower than expected reading should be taken as bearish for the US dollar. And next Wednesday, we've got a UK claimant count change, and that's a measure of the change in the number of unemployed people in the UK during that reported month. So this is very important as well for those who trade cable or US pound dollar. Next Friday, we then have CAD manufacturing sales. So again, for those of you who trade USD Canadian dollar, and this can have an effect also on gold as well. So this measures the change in the overall value of sales made at the manufacturing level. So a higher than expected reading should be taken as bullish for the USD Canadian dollar, while a lower than expected reading should be taken as bearish for the US Canadian dollar. So that's important, obviously, because the USD CAD is correlated to the gold price. So guys, we're coming towards the end of the webinar there. So good to see obviously a lot of familiar faces again. Andrew, Peter, Manoj, Priyath, Mohammed. We've got Black Cat there, Mike, Jayantha, Fernando, Fabio, Linda, Jayanti. It's great to see you guys again. We will be here same time next week. And yeah, good morning, Jayanti. Yeah, great to see a lot of you on the call, and it's good to see some of the questions coming through. Yeah, no problem, Mike. And so, guys, if you do want to, obviously, we're just covering the tip of the iceberg in terms of price action at the moment. Not really going into detail on the other indicators that we do utilize, but it's hopefully some good market analysis, gives a good view of what's going to come up with non-farm payroll. But if you do want to learn more details about our 5 core signature strategies we teach at the Gold and Silver Club, you can actually go onto the Gold and Silver Club website /course form, and you can actually see there is a learn to trade little tab at the top there. If you fill in an application form, and you can book a consultation call there for the Gold and Silver Club for us to talk you through that in a little bit more detail. You also are very welcome to also subscribe to our weekly newsletter. So just go to www.goldandsilverclub.com, and you can also subscribe to the gold, silver and commodity currencies news, live market analysis and prices. So you can subscribe to our weekly newsletter, and you can also follow us on Twitter to get alerted about the upcoming webinars that we're doing, especially the FX Street webinars. And if you do need to get in touch with us, you can do so. Email us at office@thegoldandsilverclub.com. You can call. I know a few of you actually, well, several of you are calling from Asia Pacific at the moment, so you can call our Asia office on 852-8191-0403, or call our UK office for those of you based in the UK on 0207-193-0403 if you have any questions at all. Okay, fantastic. So that brings us towards the end of today's session. Good luck, everybody, for today's trading. Going to be really interesting to see how we get on with the non-farm payroll this afternoon. Look forward to running through that next Friday as well. So do join us again for next Friday's session. Have great end of week trading, guys, and we'll catch you on the next one. Okay. So that's it from me, guys. Take care. Speak to you very shortly. Bye bye.